Welcome to the Australian Property Investment Podcast. We tackle the big questions in property investing. Our guests are industry experts, and we're fortunate to pick their brains on the challenges that investors often encounter when growing their property portfolio. Welcome to the Australian Property Investment Podcast. Let's start investing. Yeah, everyone, welcome back to another episode of the Australian Property Investment Podcast. I'm your host, Aaron Christie David, and I run a mortgage broking business called Atelier Wealth, where we specialize in helping property investors start out and scale up their property portfolios. And what we call the ambitious and sometimes frustrated property investor is where we want to share insights and also bring in people that are what we call best in breed. Today, it's got a different flavor to it. I always get a real kick out of bringing clients in because these are real life stories. They're unscripted, and the journey often is where people can, and we say success leads clues. So being able to learn from peers, people that have been there, done that, I think is the most powerful message that we've got. And we've got a fantastic client, Eddie Mastoori. Welcome on. How you doing?
Thanks, Aaron. Thanks for having me. Great to be here.
For those that don't know, this is round two. So the first time I know, Eddie, you're coming back on because we had some tech issues the last time. So I want to say thank you very much for turning out with a
My pleasure.
Face looking sharp as always, mate. So I want to get the most out of today. What we'll do is we'll come to your property journey in a little bit, but just to backtrack, Eddie, I think you've got a fantastic story. You've come over from Iran, and we'll talk about your journey. You've bought a property during the pandemic. You've gone to buy another property as well. And that doesn't stop there because I know you've got ambitions to kind of keep growing and building your property portfolio, not necessarily quantity-wise, but quality-wise. And that's something that I really love about you. You've come in, you've really kind of pushed the boundary. You don't take no for an answer, which is something that resonates solely with us, which is how do we do things, the right tempo and the right energy, but also making sure that you're not sitting still when it comes to achieving your ambitions through property as well. So what I'd love to do, Eddie, is just start with the Eddie Mastoori story, which is how did you get to come to Australia and that life journey as well, mate?
Great introduction, Aaron, and spot on. Yes, born and bred in Iran. I'm coming from a loving family of 6. We are 4 brothers, and as you probably guessed it, there was no money talk over the table. And I was the only son who was always criticizing my dad's approach to money and savings, money management, property management as well, because my dad was a designer, developer, investor himself. Mom was stay-at-home mom. And my parents, and especially my dad, really resonated with me to the person I am right now in front of you. So I finished school back in Iran. I loved design, so I started studying interior design, worked for a couple of years. Then I thought I actually need to come out of my comfort zone. So I moved to Turkey. I started hitchhiking with little to no money. For a couple of months. Then when I was ran out of money, I started working again as an interior designer. At that time, I had all my brothers here in Australia. So I thought, why not? It's time for me to join them, settle in life. And I always knew that Australia is a country where people from diverse background, from different background, they can access a lot of resources, jobs, education, social mobility, which it kind of enabled them to realize their potential and achieve their high quality of life. And that was the whole reason why I moved to Australia, education. And then, when I'm not working or not in front of my computer, I'm either on my bike, exploring different suburbs, maybe trails, and doing some sport like tennis. That's me personally.
Love it. Thanks. Definitely, mate. It's going to your professional journey and what you do for a living.
So as I mentioned, I'm an interior designer. I'm also architecture professional as well. When I moved to Australia, I started architecture because I wanted to have a holistic design approach. Then architecture wasn't as fast paced as I wanted to be. I love talking to people day in, day out. So I chose Master of Construction Management. I studied Master of Construction Management. It was more fast paced. And then I got a job with a major builder here in Melbourne and then moved to another major infrastructure builder here in Victoria as well. Currently working with commercial team on some of the rail infrastructure here in Victoria. So very lucky to be in this position. Property-wise, we purchased, my partner and I, we purchased our principal place of residence back in 2020 when there was early pandemic.
Yeah.
When there was rumors, there was talks that property market's going to collapse by 30%. There were articles everywhere on real estate, property prices going to halve by 50%. And we pulled the trigger. We purchased our principal place of residence. It was a renovation delight. It was a rundown property in one of the very good streets here in our neighborhood. And we started renovating ourselves with a little construction background. And then, we built in some equity with the help of COVID, pulled out some equity. We purchased our first investment property back in 2022. That's pretty much me.
Love it. So I want to talk about that first purchase because I think there's so much going for it. There's one part which is the mindset to buy during the pandemic, especially when you feel like the odds may be stacked against you from property prices falling. The next one is around co-purchasing with a partner and I guess how to get on the same page financially as well. And then the next one is around the renovation. So I feel this first purchase has got a lot going for it in terms of your mindset and what was working. So let's start with the decision around timings to buy. Were you looking for a while? Were you ready to buy and it's like irrespective of what the market's doing, we're going to jump in? Or it's like, I'm going to ignore the media mainstream vibe around prices falling off a cliff. Take me through that decision, Eddie.
Very, very good question, Aaron. And that's something that if you go to basic, that's something that's overlooked by a lot of people, including my circle and including myself. So I didn't have any plan to purchase our home back in 2019. So it was a push from my partner. And obviously, like everyone else, we had obstacles, like we had disagreement, right? The biggest obstacle that we had was the deposit, right? The deposit, obviously, we had some savings, but we got some help from my youngest brother, thanks to him. But everyone comes from a different background and different set of circumstances. And I guess it's important that you control over your decision. So what we did back in 2019, early 19, we started looking. Prior to started looking, we sat down with my partner and we thought about why we want to purchase a property. What's the point, right? Is home ownership a milestone? Is that because we migrated to Australia, you need to pass this milestone? Yeah. So we went back to very basic and we actually wrote everything down. I still have it. I still have that notebook that we literally sat down and wrote down a lot of these points that let's know ourselves, who we are, why we want to purchase a property, why do we want to have a home? Is that really viable? Is that a best decision, or is it just the ego of having Australian dream realized for ourselves as well? And really how good we are with money. So a lot of these questions, I'm not going to go through nitty gritty of all these questions, but there were a lot of questions and we were answering all of it. So there were a lot of talking before we even start going out to market to purchase. We were very honest with ourselves. We said it's a big milestone, taking out such a big loan. And we also loved the ego because we were migrants. We were in our late 20s, early 30s. We thought it's a good decision. You will love it when you own a home, especially if it's a house in a 600 square meters. Why not? You want to settle in your life. So we then thought about whether this decision may lead to some bigger decision. Do we want to be wealthy? Do we want to use real estate as the driver for being wealthy? Do we want to have more time in our later stages of life? Could be retirement, could be in our 40s. And what are the challenges? And we always knew that wealthy people, they have a growth mindset. They're not afraid of failure, and they try to embrace the lesson all the time. And there was one keyword, Aaron. There was one keyword that we thought we want to avoid it. That was procrastination.
Beautiful. Yeah, nice.
Do the work. So it's good to sit down, have a chat, do it. But when you don't pull the trigger, nothing would happen. So yes, we pulled the trigger. We thought we need to tackle this procrastination. And once we got the mindset right, we thought how we can maintain that mindset.
Yeah.
So that was the second thing. But the third thing, and the most important one, was to get the strategy right. Right mindset and a strategy. So we started investing time and money into education, podcasts, books, YouTube, digesting all the information. And not everything is correct. There's no black and white answer, but you need to just digest a lot of information to just learn. And once you learn, it's time to establish a long-term vision. What do you want to be? My partner and I, we wanted to be part of that 1% Australian investor who owns 6 or more property.
Beautiful.
And we thought home ownership, principal place of residence, could be a tool, an enabler for us to use it for future.
Yeah.
And a strategy, patience. You need to be patient. It's a process. You need to enjoy the process. We really enjoyed it. We looked for 6 months for our first property. We were disappointed. But again, going back to right mindset, we thought, yes, we need to have the patience.
Yeah.
We need to be patient. And in summary, as I touched on, 2 things: establish and maintain positive mindset and good strategy. This is how we approach our first property.
Yeah, nice. And then I guess you get to that decision where you go, look, we know we want to buy, we know where we're thinking of buying. Then the decision to buy something that needed a fair amount of work, like a fixer-upper, as opposed to something you can move in, and you say, look, we've got very limited construction know-how or knowledge or expertise. That decision to then buy something that needed some work, is that purely based on, say, price? Is that based on, we think we can get in there and add some value, for example? How does that decision making then start to unfold for you guys, Eddie?
If I want to be specific to our decision, we looked at radius from Melbourne CBD. We wanted to be as close as possible, and you're spot on. There was a limited budget that we had, right? And at the start of our decision, we said that we want to purchase something that we could renovate, so we can give some love to that property. We can purchase in a lower price point, but obviously in a good street. But then so that we can start renovating that place. So yes, you're right. It was more budget, but suburb was our very first priority, not the property itself. We wanted the house, no unit or townhouse. So In my filter in realestate.com, I didn't have any units or any townhouse. It was purely based on the price and a suburb, and we narrowed down our options of suburbs into just a few of the suburbs that we knew and we researched about it.
Right, thanks. I think it's so important. I think the buying in the right location, call it suburb or particular streets within that suburb, can be a big difference between buying well versus buying cheap. I think some people will buy into an area and just buy a cheap property to get in. There's some things you just can't change, right? You can't change if it's on a busy street, if it doesn't have parking, for example. There are some things about a property you can't change. Whereas you, John, look, we want to buy in a good quality area. We want to buy a freestanding home, some good land size as well. The inside, we're not going to get hung up on the style of the kitchen or the flooring, for example. That can all be changed.
Right.
There are some things that we can't change about a specific property. I think that level of filtering down and what you're filtering for on your search becomes super important, whereas some people are just filtering for price and they're buying the cheapest property. It's like, that's probably not the best way to be buying. Going, these are our non-negotiables. We know we might have to pay a little bit extra, but we know we're buying quality as well. And I think that's
very important, Aaron.
Yeah.
Very, very important. I've seen some people that are against buildable houses because they have no knowledge of buildable houses and they want to specifically focus on brick houses. Yeah. I'm not saying it's a mistake, but people and listeners needs to go through nitty-gritty of having both of them. They need to study. They need to know the benefits or the disadvantages of bricks or even weatherboard. So do not narrow down based on the quality of dwelling. It's important, but it all depends on your goal in future.
No, well said. Well said, perfect. So you mentioned before around podcasts, you consume some books. You've spoken to some people. So take me through, who are some of the people that have been on your journey that you feel have kind of helped you step up in the way that you think, for example, maybe change the way that you have an outlook as well?
I always have mentor in my life. So for anything that I do, I try to have someone that I sort of talk or even follow, right? Their guidelines. Having a mentor in investment or even property purchase really important because it can give you a lot of valuable lessons. Obviously, they've done it and they've gone through a lot of mistakes, so you get to learn a lot from them. I listen to a lot of podcasts, right? And when we started looking for our investment property, I went to this auction and I saw a lady who was very powerful to me, very, very powerful. We started bidding, and I traced her down, and she was Kate Bakos. So I started listening to her podcast with Peter Kolazos and Dave, and then I got to know these guys better. Kate really resonated with me, so I do follow her on social media. I trace her down, every single property that she purchased. I try to match the photos and see what she's buying. So she's acting to me as a mentor. Very, very important to have someone. It's good if you have connection, in-person connection, but if you can't make that happen, I guess social media is an enabler. It's a very powerful tool for us to use it. So yes,
it gives you direct access to someone like Kate without maybe having to go down the path of like, I'm not ready just to engage you yet, but I can tap into your knowledge, and they're so good at sharing their expertise, and they just want more people to do well. So they've got, I think you said about a
great human
mindset. They're putting out great content. I mean, Kate's been fantastic on the show a while ago, and they just want to give their knowledge away, and then people that want to work with them will then obviously pay a fee for success as well.
Yeah, I don't encourage people to do it, but I dropped her an email. Yeah. I asked for some advice, and I said, look, I'm Eddie, and I have no plan to engage you for at least 2-3 years because I have no plan to purchase any further property in Victoria. But I'm interested to know who is the best property management firm in northern side of Melbourne. And she introduced me to great specialized property managers that I'm actually using now. I'm very, very happy with them.
Yeah.
Yes, and that's where you learn a lot from people, I guess.
Well done. Well done. And it takes initiative. What I love about that part of the story is you can follow someone, but it takes initiative to either get in touch and strike up the relationship and be really open. Like, I'm not ready to buy yet, but at some point it may be opportunity, and they know, like, yeah, okay, there's some commercial benefit, but like you're saying, mate, people that have the heart of gold and they've got that abundance mindset, they're going to want to see you do well, you prosper, and they prosper. Yeah.
Correct. That's exactly right.
Yeah, nice. And so you've gone from 1 to 2 and you scaled, I would say quickly, but when the time was right, you're like, look, we're not going to rush out and go and buy to get to that 1%. We know we need to follow a time path here, and a bad purchase will set you so far backwards compared to purchase will then just put you on that normal trajectory, whereas coming off course can really push you so far off course. So that decision, when to buy next and what to buy, how does that conversation entail with your partner and the decision making that goes behind that as well, Eddie?
Sure. So we had the right mindset, I suppose.
Yeah.
We tried to maintain it throughout 2 years. Obviously, as I mentioned, we renovated our place. We built some equity. It was a very good amount. We did a lot of search, a lot of research. I talked to a lot of mortgage brokers. You were including you.
Yeah.
We decided to order some valuation, came out really well. And we then sat down with my partner, said, what are we going to do?
Yeah.
What's our risk appetite? Are we going to pull the trigger, purchase another property? And there was some disagreement, right? There was some discussion. It's very normal. You will have it.
I'm glad you said
one will have it.
I think
everyone
they suffer in silence. Thinking, we're the only ones that are wrestling with this, but I can say that there's probably no testing time than being a couple trying to buy property, right? You have an idea, your partner has an idea, you've got to try and come together. And I've said it great times, you can't build a house of 2 different blueprints or floor plans. That you've got to get on the same page. And we're talking about money, we're talking about investing in the future, which is speculative regardless of what asset class you choose. And in the back of your mind, you're always thinking, well, what happens if this goes wrong? Or one partner's thinking optimistic, one partner's thinking, risk mitigation. And then to try and move forward while you feel like it's almost like you're spinning the wheels a little bit, pulling the triggers are hard. It's easier said than done sometimes as well.
And there's no shortcut. There's absolutely no shortcut.
Yeah.
In our case, I'm very aggressive. Every decision that I make, I'm very aggressive. This is my nature. Whereas she is very passive. So it's I think it's a good balance. We sat down, we said, okay, let's buy 3. And she said, how are we gonna do it? And I said, I'll give you a lot of figure. I'll give you some instances where people purchase 3-4 properties in a year. Look, this is me being aggressive. And she was right. We need to balance it, right? So we sat down, we said, let's buy. It was in the time where interests were rising. So we thought, okay, now let's buy the best property that we can with this money. Not 3 purchases, not 4 purchases. Let's buy one with the best quality as possible in the best area as possible. So we decided, we talked to a lot of people, we pulled the trigger, and it was the best decision. It took us about 5 months, but we had patience because, again, that right mindset, and we pulled the trigger, we purchased.
Well done. And the search criteria, you said, look, over 5 months, we're doing some due diligence, we're doing some research, obviously getting finance ready, for example. What decision did you end up making, and why did you make that purchase as well?
I learned a lot from those podcasts I was listening. One of the people that I I do still like, and I do listen to him. As Peter Colazos talking about numbers, talking about stats, talking about ABS data, how you can draw down some stats from ABS data and how you can interpret that. So I pulled out a lot of numbers from ABS, put it into a spreadsheet. We narrowed down the suburbs into 10K radius from CBD, and we started looking into different personalities. Obviously, at that time, I was still following a few buyers agents like Kate Bakos. Where did they buy? What's the characteristics? What's the best street of that area that we could buy? So we narrowed down into just a few suburbs, and then slowly, we got into those suburbs. We actually rode our bikes. We hang out a lot of nights there to know the suburb better. So there are a lot of things, a lot of due diligence. If people don't want to engage buyers agents, you need to spend a lot of money, sometimes cost, to know the area better. And then obviously we again narrowed down to 2 specific suburbs that I knew there will be some potential growth in the future. I'm very interested in the western side of Melbourne because they are underrated to me. So the decision to purchase a property in the western side of Melbourne, I was a little bit biased, which I'm not saying it's wrong, but it ticked all the criteria that I had to purchase an investment property. And then, yes, we started looking. I started calling all the agents in western side of Melbourne, talking to each one of them. What's the best street? What's the worst street? Where's the housing? Where do you think I need to invest? And I put all these ideas all together. I realized that, yes, that's the suburb that I'm looking. And yeah, we started looking. We pulled the trigger. First week of the campaign, we purchased the property.
Oh, well done. Well done.
So there's a lot of time and effort that you need to input it.
And that's exactly what I was going to ask you, time and effort. So someone's listening going, look, I'm time poor, I've got a demanding role, I've got a young family, for example, or whatever their life challenges are, going, the decision to take it on yourself versus, delegate and work with a buyer's agent. Take me through the decision that you made to do it yourself.
It was the second month after we had the finance, right?
Yeah.
And then there was only 1 month left from our pre-approval. Yeah. So, and it was in the time where interest rate was rising. So we thought after 3 months, we couldn't purchase up to X amount, and we need to bring down budget, right? And the property prices wasn't really declining, right? Yeah. So property prices fixed. And our budget is lower now. Yeah. That was the time that we thought, let's sit down. Can we engage a buyer's agent? And that was the time where we had a lot of argument, because when you're paying a buyer's agent, right, that's a lot of money.
Yeah.
But delegation is something that if you don't have the time, if you don't have the knowledge, you need to do it. You're spending millions of dollars. You're spending 1.5, 2 million, sometimes under $1 million, and you're paying X amount, which surely it's like 3%, 4%, 15K, 14K. I don't know the figure.
Yeah.
But around the same figure, you spend a lot of money and you don't want to engage a buyer's agent. I think that was a mistake. Not for me, because I had the time. I had little knowledge from podcasts. And as I mentioned, I'm aggressive. I do want to do it myself and learn. But Aaron, I can tell for our next purchase, end of this year, and the next one, I'm not doing it myself.
Yeah.
Because it took a lot of my time, and I'm not the person who I was a year ago. At the same time, diversification is critical. So we didn't want to purchase anything in Victoria. And obviously, if you want to purchase something in interstate, I would rather engage someone, pay and manage to purchase on behalf of me instead of me going to that specific state to purchase.
Yeah. Thanks, Eddie. Appreciate that. And yeah, it takes obviously a lot of self-awareness, I'd probably say, where you go, look, I know there's limitations based on not only your geography, but now it's knowledge, right? Like you got to here, but what got you here will not get you to the next level and won't get you to that ambition of, 6+ properties. So, right now we've got maybe a knowledge or a skill gap, and the buyer's agent's a bit like that insurance policy to help you grow and scale, because they've done it before. They know exactly people in your situation, how to then scale up. And so I think, you've done well to get to here, and it's, be able to put that foot down to the pedal to the metal is going to take you to that next level in your growth as well.
Correct. If you do one property in 1 year or 2 years' time, they may do 2 properties per week. So they get to see, they do this on day in, day out basis. So anything's better.
Yeah, no, well said. So, I mean, that's probably one part of your advice and your learning journey, for example. So if you were to go back and say someone's starting out, whether they're buying that first place to live or they're buying that first investment property, what's some of the top tips that you may be happy to share, or some of the insights that you've gained with some learnings that you've had, Eddie?
Sure. So regardless of you being time poor or not, spend a little bit of time just to know the market. That's it. The expectation is for you not to go into nitty-gritty of everything, but know market, know the language, and then you can engage someone. So first step is, if you're time poor, engage someone, delegate it, outsource. There are people, there are experts out there who can help you make a better decision. COVID time, that 2 years it's not going to happen again. So the property is not going to increase by 40% in some areas in a year's time. It won't happen. It will have a normal progress of 5-6%, whatever. So first tip is outsource it, even if you have the knowledge. Second tip, get a good team around you, good mortgage broker. When I'm saying good mortgage broker, someone who's investment savvy mortgage broker. Second one is, spend a little bit of time and money into your decision. Engage a building and pest inspector. I should have done it for my first property. I should have done it.
Did you not get a building pest inspector, Viv?
I was so confident. I went underneath of the house. I had a look at the stumps. I had my torch on me. I looked at every single details, right? Yeah. I'm not saying I did it wrong, but I should have done it. It was only $400-500, and we made a purchase up to $1 million. Why do you want to do it? So, good team, good building and pest inspector who can give you a good report, and you can have a chat over the phone with him or her. It's very important. If you want, you can engage a financial advisor as well to give you a lot of tips, a lot of planning. If you don't have the time to do the reverse engineer, what income you want to have when you retire. So financial advisor, someone who you can talk with on daily basis, right? Fourth person is accountant. Having a good accountant is very important. You talk to that accountant again every day.
Yeah.
Currently, we are exploring rent vesting option, and I've been talking to you. I've been talking to my accountant. What's the financial benefit? What's the downside of it? What about in future? So a lot of talking, and I have a good conveyancer, so who I can talk to on a weekly basis. So good team, very important.
Yeah.
Outsource it to people. Spend a little bit of money. That's a lot of cost, and you're spending little to no money compared to that. So get a good team as well, and get a good mentor. Get someone who can help you.
Well said. And yeah, I think you touched on it earlier. A mentor doesn't necessarily have to be someone that you're paying. Doesn't necessarily need to be formalized. Someone that you go, I resonate with their philosophy. I resonate with their journey. I feel like values alignment is there, and I can just access their content, their resources, then their IP that they're putting out. And then at that point, once you've kind of consumed as much free content or everything they're giving away, and then at that point you can say, look, now I'm really vested in this person and I want to engage. There might be a small fee, or they might have an accelerator, they may have a online course, and then you go, rather than paying for the course and not finishing it, take as much free information that they're putting out, consume, and then you know that this is the person that you want to give your money away to as well, which I think that's what a great relationship from a mentor perspective is. You're vested in what they're putting out. Right.
Yeah, very important. Very important. Anyone that you want to work with from your team, you feel connected. Very important that you get this feeling that you are connected with that person. I told you before that I interviewed a lot of mortgage brokers. They're all great, right? But I wanted someone who I can connect, someone who's responsive, who can communicate. And after 10, 12 people, I got to know your team, very responsive. I got to know my property management, Madeleine and Stephanie. So they were very responsive and I connected with them really well. So it's very important that you feel that.
Yeah, correct. And that's it. Some people may respond to that style where they get put through their paces and like that alignment. And some people are like, nah, I have to sing for my supper. I'm not going to do it. And that's where you'll quickly find a team and who you're filtering for as well. So
yeah,
I like it. Iron sharpens iron's what we say here. So when clients get us to challenge, the way that we're running our business or the results that we're giving them, it's like, hey, yeah, let's find a way to push the boundaries, or we comply or within the confines of it. But we know that investing is a game of finance. So when you unlock that part of it, your journey, like that probably is going to continue to compound 6-7% year on year. It's the way that you play the game of finance that's ultimately going to determine the outcome. And anyone that's built a high quality, high performance portfolio, any of the big buyers agents that have accumulated 30, 40 plus properties, they didn't get there by trying to save 0.1% on a rate. They got there by the loan unlocking that equity to then go again. And the loan was simply the vehicle to keep growing rather than the energy going is trying to save on the loan. It's like, how do we get the upside on capital growth and cash flow?
And they have their own team as well. They have their own buyers agents, have their own buyers agent.
That's exactly it.
So as you touched on, it's a game of finance, but you got to have a good team. Even those people with 30 mil, 40 mil plus property portfolio, they have all of this. So you can literally just copy them. It's a simple rule, just to copy them. Why?
Yeah. This leaves clues. So just copy.
That's the rule of thumb.
With the mistakes they're making.
Yeah.
It's been great. Eddie, I want to say thank you very much. I know we put this out there to some of our clients who wanted to join us, and they, like always, you come with a smile and you're always willing. So I want to say thank you very much for the energy, the knowledge.
Pleasure.
Ed as well. I can't wait to get back on some point in the future when you be able to make that next purchase, and we can talk about that in a little bit more detail. And again, just a way to share and document your journey, because someone's looking at your situation going, hang on, if Eddie can come to this country with not a lot to his name, can accumulate 2 properties in a relatively quick period, and on similar-ish incomes or similar lifestyle, if you can do it, and it's not to belittle, if you can do it, anyone can do it. And if I can do it, anyone can do it, right? It's that limitation that people set in their own headspace that's probably stopping them from taking action, from pulling the trigger and being able to move forward. And the property market rewards action takers. Like, that's the only way to get results, whether it's in the stock market, whether it's crypto, whether it's property, whatever your poison is, you have to take some action. And you may fail forward, but at least you're moving forward as well. So Eddie, thank you so much for
always, Aaron. Thank you. Thank you very much for having me.
Thank you, mate. If you found this episode helpful, leave us a review. But we love it when people reach out with questions that they've got that they want answered in the future, whether it's from a client or someone else in the property sphere as well. So we look forward to bringing you our next episode. Like I said, if it's been helpful, please leave us a review, and we look forward to chatting to you soon. Until next time, take care.